Ever wondered how to turn $1,000 into 10,000? Everyone wants to, but let's be real. The people who actually pull it off aren't chasing those sketchy get-rich-quick schemes. They understand the fundamental truths. How money grows, how risk really works, and why consistency beats luck every single time. Today, I'm going to break down 5 proven, safe strategies to grow your $1,000 into $10,000. This isn't about gambling, it's about building real wealth. Before you invest even a single dollar, you need to internalize this. Growth takes time. Seriously. This is the #1 reason most people fail financially. It's not because they don't have enough money. It's because they lack patience and discipline. Think about it this way. If you can consistently grow your money by 20% each year, that initial $1,000 will become $10,000 in about 13 years. Bump that up to a 35% annual return, and it happens in just 8 years. That's the incredible power of smart, consistent investing. Imagine your money is like a snowball at the top of a very long, snowy hill. The earlier you start rolling it, the bigger and faster it gets as it picks up more snow along the way. You don't need a giant snowball to start. You just need to give it that first push and let momentum take over. The key isn't how much you start with, but how early you start and how consistently you keep it rolling. Now, let's talk about the engine that drives this growth. Compound interest. Albert Einstein supposedly called it the 8th wonder of the world. And for good reason. It's one of the most powerful forces in finance. Compounding simply means you earn returns not just on your original investment, but also on the returns you've already accumulated. This is how wealth stops growing in a straight line and starts growing exponentially. Let's run some simple numbers. Say you invest your $1,000 with a 10% annual return. After year 1, you have $1,100. Easy enough. But in year 2, you earn 10% on the entire $1,100, not just the original $1,000. That might seem like a small difference at first, but over time it becomes absolutely massive. With that same 10% yearly return, your $1,000 becomes $2,593 after 10 years. So, where do you put your money to make this happen? If you're not an expert stock picker, and let's be honest, most of us aren't your best friends, are ETFs and index funds. ETFs, or exchange-traded funds, and index funds are baskets of investments that track an entire market sector or index, like the S&P 500. This gives you instant diversification, which is just a fancy way of saying you're not putting all your eggs in one basket. For example, the S&P 500, which represents the 500 largest companies in the US, has delivered an average annual return of around 10% for the last century. At that rate, your money could double roughly every 7 years, just by being invested in the market. You don't need to be a Wall Street genius. You don't need to predict what the market will do tomorrow. You just need to be consistent. Set up automatic investments every single month. If it's just $50 or $100 and let time do the heavy lifting for you. It's the most boring, yet most effective way to build wealth. Here's another pro tip that supercharges your growth. Reinvest your dividends. When you invest in certain stocks or ETFs, they pay you a portion of their profits, called dividends. Many people make the mistake of cashing these out and spending them. Don't do that. Instead, set them to automatically reinvest back into the investment that generated them. This is where the real compounding growth happens. Each time a dividend is reinvested, it buys more shares. Those new shares then generate their own dividends in the future. It's like you're planting seeds, and those seeds grow into trees that produce more seeds, which then grow into more trees. It's a self-sustaining cycle of growth. Successful long-term investors don't rely on getting lucky with market timing. They rely on the relentless power of reinvestment in time. The longer you stay invested and keep reinvesting, the more powerful the compounding effect becomes. Next, let's talk about protecting your hard-earned money. To shield your wealth from the silent thief known as inflation, you should consider investing in real assets. I'm talking about things like gold, silver, or even real estate. These are tangible assets that tend to hold their value, or even increase in value, when the purchasing power of currencies like the dollar goes down. And you don't need millions to get started. You can buy fractional shares of gold through various online platforms. You can invest in real estate through REITs, which are real estate investment trusts that trade on the stock market, just like a stock. Or you can explore real estate crowdfunding platforms that let you pool your money with other investors to buy properties. The key here, once again, is not to try and time the market perfectly. The goal is to stay in the market. Markets will always have their ups and downs, but long-term investors who hold real, valuable assets almost always come out ahead. Finally, we arrive at what I believe is the single most powerful way to accelerate your journey from $1,000 to $10,000 and beyond: building an income skill. The math is simple. If you can earn more money, you can invest more money. And every extra dollar you invest dramatically speeds up your compounding growth. Focus on learning a high-income skill that is in demand. This could be anything from digital marketing, coding, or graphic design, to sales, copywriting, or even mastering the art of investing itself. These skills multiply your earning potential and give you something priceless: financial freedom and control. Think about it. If you can increase your monthly income from, say, $1,000 to $2,000, you've just doubled your ability to invest. This means you can reach your financial goals in half the time. Always remember that the highest return you will ever get is from investing in yourself. So, to wrap it all up, turning $1,000 into $10,000 isn't some mystical secret. It's just math. It's a formula that requires patience, consistency, and time. You don't need to get lucky. Most people drastically overestimate what they can achieve in a month, but severely underestimate what they can accomplish in 5 or 10 years. Start small, but start now. Stay consistent with your investments. Reinvest all your profits and dividends, and let the incredible power of compounding do the hard work for you. Make time your greatest ally, not your enemy. If you found this video helpful, do me a favor and hit that like button. Subscribe to the channel, and share this with someone who you know needs to start building their wealth today. In our next video, we're going to dive deep into the psychology of money and explore why you might still feel broke, even when you're doing everything right. Thanks for watching, and I'll see you in the next one.